Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Thursday, April 30th. To the S&P 500, and here we've seen strong selling in this market today, very large black body candle following the less intense candle from the previous day where the sellers lost commitment down below the 2100 level and at the Tenkan-sen indicator. For the third trading day in a row that area was tested, the area failed to hold a support as it did for the prior two trading days. And the sellers have come into this market very, very strongly, very large black body candle, highlighting strong downside momentum from the sellers. Also, the sellers showing strong commitment by closing down below 2100 and below the 2093 area. Now, the market has found strong support at the top of the Ichimoku cloud and at the top of this highlighted yellow zone, which is unsurprising, and it has held as an important area in the recent past. And if we look at this candle here from roughly about 2 weeks ago, we see a very similar shape candle, very, very similar size black body, closed roughly in the same position, same size of the small shadow on the bottom, and being rejected from within that area around the cloud and the highlighted zone and the Kijun-sen indicator. So there's a possibility of the buyers coming back into the market as we saw for the day following that large black body candle. So we will be watching very, very closely. Now, very strong resistance obviously at 2093, then around the 2100 round number, with the Tenkan-sen trading just above there at 2101. Support here at the Ichimoku cloud should be watched closely, 2078, but we could see this market trade anywhere down through to the bottom of that zone, down around the 2040 level, before we see strong support coming in. And here we see a previous time when the market tested down there, and on two other occasions testing down well towards the bottom of that area, so anywhere through to that area, but the test is going to be that 2040 level if the market does eventually trade down to there. Just looking at the Fibonacci extension, and here we've seen the market trade through the 61.8, 50%, 78.6, and closing just around that 100% level on a strong bearish candle. It does suggest that this market certainly could be trading down to lower levels over the next few days. And the 161.8% level is an area you should be watching closely at 2061. Now with the Fibonacci retracement, and here we've seen the market trading through that 78.6% level on the Fibonacci retracement, possible test to the 100% level, which is basically the previous swing low, and we know that's an important area. It's the 100% level at 2072. Moving next to the bands, and some very important trading coming up here over the next few days. The market is trading back within the bands as we saw for the previous day's trading, so highlighting that we don't have that very strong bullish bias in the medium-term time frame anymore. The market prior to today's trading testing very close to the middle of the bands and finding some support around that area, but that area has failed to hold for today's trading, but the bottom of the bands has held, and we've seen the market test through there and fail to close beyond there, and that's an important area moving forward. At the moment it's roughly about the 2082, 2083 level. If we do see the market break out in a bearish manner, it could be the beginning of a new medium-term trend into the downside, and a strong one. But what we'd want to see is strong follow-through. So the market, by trading here within the bands, suggests slightly bearish bias, but not terribly strong at the moment. Just moving over quickly to the Nasdaq 100. And here we see similar, well not similar, but in size of the large black body, similar to the S&P 500. We have a larger shadow here on the top, and that represented the buyers testing to the resistance at the previous swing high at 44.83, being rejected from there in a very strong manner, with the market closing down below 44.21 with the sellers in control, and it does suggest very real possibility of the market trading to lower levels. We've had the market previously trading up above the Tenkan-sen and then trading through there, with the Tenkan-sen now holding as resistance, and very often that is the way that we see a market transition from an uptrending phase in that short-term time frame to a a moderately strong downtrending phase, so we'll be looking for some strong negative follow-through to confirm that. Importantly, here is the bearish close down below the Kijun-sen indicator. That suggests that we have a bearish market in the medium-term time frame as well as the fast-term time frame. And looking over at the Chiká span, that is just below the corresponding price action now, and it's suggesting that momentum has shifted from the positive down to the negative side, and suggesting we could see this market trade lower. Now, if we do see the sellers continue in the Nasdaq 100, obviously there's likely to be very strong support at the top of the Ichimoku cloud initially at 43.83, so that's an area we should be watching. But we do have a lot of support all the way down through to the bottom of the cloud at 42.81, and there is an opportunity here for the sellers to certainly change the bias in this market in the long-term time frame, but they're going to have to close out down below the Ichimoku cloud, and then we want to see some strong bearish follow-through to confirm that. So still early days yet for any strong bearish market, but we certainly could see the buyers come back in over the next few days off the top of this Ichimoku cloud. No guarantees of that, but we should just be on the alert for the sellers losing any commitment around these levels. Just looking at the Fibonacci extension technique, and here we previously we saw the market interacting around that 100% level, being rejected from there in an indecisive candle. The opportunity was there for the buyers, but they failed to come in and change the trend. The trend has continued down today, testing to the 161.8% level, really blowing out that 100% level in a major way today, and a small amount of price rejection. It suggests a small opportunity here for the buyers, but I doubt very much that we will see the trend change based on that small rejection from there, with the sellers being in control. The next level that's important here on the Fibonacci extension is a 261.8%, which is down very close to the bottom of the Ichimoku cloud. Moving next to the Fibonacci retracement of the prior first time frame uptrend, and here we saw today the market taking out the 61.8% level in a bearish manner. Previously we had that indecision around the 38.2%, and as with the other techniques suggested, a strong possibility for a change of trend. Today the sellers have come in strongly, breaking out down below 61.8%. It gives us our next target at the 78.6% level, corresponding with the top of the cloud, so strengthening the amount of potential support there. And if that area is breached, looking to the 100% level at the previous swing low at 43.33.